keep your eye out on the global screen. But let's discuss the markets in greater detail with Amit Rathi, the MD of Anand Rathi Financial Services. He joins us on the sidelines of the 6th India Investment Conference 2016 as organized by the CFA Institute. Hi Amit, afternoon. Shaky start to 2016. How are you penciling in the rest of the year? And are you getting the sense that we're closer to the bottom, or do you believe there is more downside in store?
Look, I think, of course, the year's been off to a bad start. When we go back in history and look at, corrections like this, typically you see markets falling 40–50% in dollar terms in the emerging market space. We're down about 20%. Possibly we could be down 10%, but I think, what I tell clients is you need to be long-term greedy in this market. You don't know how much pain is left. Maybe it's 10%, 15%, but I guess most of it should play out in the next 3 to 6 months, beyond which markets should start to pick up. But I think we need to recognize that India is actually a dual-track economy now. You will have the global commodities, sectors which will stay impacted. You've also, of course, got the traditional rent-seeking, companies and sectors which will are also, they're the ones who are sort of crying foul. But on the other side, you've got a lot of themes that are going to play out. So you've got the urban consumption theme, you've got infrastructure spending. So I think if you just focus on the right side of the market, there is money to be made, and if you're long-term greedy and you sort of put money in while these markets are correcting, it's probably a great opportunity.
Great opportunity is what you say, Amit, and I was reading through your views earlier, and you did believe that the mid-cap outperformance is likely to continue into 2016 as well. But at the start of 2016, we've seen the butchering of mid-caps. So what's your view on the mid-cap space?
Look, again, I think mid-caps, have taken a beating a little bit in the early part of this year, but I'm still optimistic. I think you'll still find a lot of companies there that are immune from what's happening globally. I think one needs to separate what's happening in terms of stocks and companies that are over-owned by foreign investors, and there's a lot of forced selling. I think one has to, of course, focus more on sectors rather than market caps, but generally speaking, we're seeing better growth rates in the mid-cap and small-cap space. So that's what's is leading to conviction that in the next 2–3 years, that sector will continue to outperform.
Okay, Amit, completely run out of time. Thanks so much for joining in. So hopefully all the pain should be out of the system in the next 3 to 6 months, and mid-caps will show you better growth rates. That's the time we have for you on Mid-Cap Radar, your stocks when we return.